Hello, everyone. My name is Gev. Hope you're having a great day. It's Wednesday, April 8th. So let's talk capital. So let's start with S&P 500. So as we've been talking about for the past 2 weeks on IG, S&P 500 levels we've been watching for were the weekly 200 moving average, which is represented in the green line right here. And we were saying we're watching 2650. If we can get above 2650, we'll most likely see a move higher, which is what's happening right now. But what we need to understand is each one of these candles represents a week, and the week is not over yet. And we still have 2 more days with high volatility news coming out tomorrow with unemployment claims. So this market can possibly close higher, close lower for the week. Okay, but basically what we're looking at is this. This weekly 200 moving average has been respected since the bottom of the recession in 2009. Okay, and every single time we've come into contact with the moving average, as we can see here, we've moved higher. Okay, but every single time it's been retested. We have one right here where we moved to the 200 moving average, moved up about 15% and came back to confirm it. Okay, same idea here. We came down, moved up about 8% and came back down to confirm it, and then we went higher. Okay, 2008, the dramatic sell off we had stopped at the 200 moving average and we moved higher. Okay. Another thing to take into account is that once we bottomed in 2008, we set this uptrend that we've been respecting is this gray line right here. Okay, and every time we've come into contact with that, it's pretty much coincided with the 200 moving average and has been respected every single time. Okay, what I want you guys to understand is this. We've never in the past 11 years closed weekly candles under the 200 moving average. Okay, and at present day today, we've closed one, two, three candles and are currently barely above it. Okay, now if this week can close above it, then what will happen next week is we'll have a retest of it at 2650 and then we'll probably move higher. Okay, but we have to see what happens. So, short term, to medium term, I'm neutral. Realistically, this market it doesn't have a direction yet. The volume isn't there, and we're moving up on negative news, which usually isn't a good indicator. And what I want you guys to understand is this: every time we've had a dramatic sell-off like this, we've come back to test that low that we made. Okay, except for one time. Okay, we had a V-shaped recovery this time, and this is very rare. As you can see, it doesn't happen too often. We usually get a test of the low we made. Okay, now because the low is so far down here, what will happen is this: if this market is bullish, then we'll have a test of this trend line, which sits about 26, 25.50, 25.60. Okay, so we are going to see a move lower. Okay, and once we see how we interact with this trend line, is what then we'll know what direction we want to move in. Okay, but like I said, short to medium term, I'm neutral. Long term, I'm bearish. Okay, and I do not trade these indexes. I'm an investor in these indexes, so everything that I do with the indexes is long term. Okay, so as of right now, there is no long term play here. Okay, if anything, we want this to move higher to this 2850 level so we can short it back down, or we want to see a weekly close underneath this gray trend line, or even underneath the 200 moving average will be significant enough to show that we're not bullish. Okay, like I keep saying, a bull move from here just doesn't make sense with the amount of people who are being laid off, businesses, small businesses that are closing or have already been closed and are not making profit. I mean, it just doesn't make sense to be long any of these indexes right now. Okay, and let's look at the Dow now. So the Dow is looking a lot less healthy than the S&P. S&P's, like I said, short term it's neutral. Okay, but this short term I'm bearish on the Dow because same concept, 200 moving average weekly, we're below this. Remember S&P 500, we were at least above it. Okay, it's giving you a little bit of a hope. Okay, this is below it. Not only are we below it, we're also below the lows we made in 2018, and we're barely above this um, gray trend line. Same trend line we have on the S&P 500 is basically the same thing that's on the Dow here. And you guys can see how we've broken it previously over here, but every time we respected the 200 moving average. Okay, and this moving average is respected in both ways. If we're above it, we respect it and move up. If we're below it, we respect it and move down. And that's exactly where we sit today. We're sitting at a resistance level, which is which I highlighted with these orange lines. Okay, this resistance level sits exactly at the 200 moving average. Okay, so we almost touched it. We could go ahead and touch it, and then we're going to see a move back down. Something looking like possibly that. Okay. If we do break above, it's possible. Nothing is impossible in this world. It's possible we do break above. And then we would move up to the next resistance level, which is 47, sorry, 2700, 27,786. Okay. 24,786. Yeah. And then we would see a retracement back down to 200. Okay. As of right now, this, again, short term, I'm bearish. Long term, I'm bearish on the Dow. It just does not look good. It looks even worse is the Russell 2000. Russell 2000 is way below the 200 moving average weekly. It's way below its trend line set from 2009. I mean, Russell 2000 just does not look healthy. Like we came down, we tested this right here, and we recovered. We came back down, tested it again, and we recovered. We came back down, tested it again, and we recovered. And this time, we literally blew through all of these support levels. We blew through the 200 moving average. We blew through this historical uptrend that we have from 2009. We blew through this low that we had set in 2008. Okay, so basically what I have drawn out is what's going to happen here. We're going to come up and we're going to retest this resistance, this support that is now resistance. Okay, so it's support coming down to it and it's resistance going up to it. Okay, since we broke through it and closed underneath on multiple weeks now, we're going to come up and test it. We cannot continue down in a straight line to the bottom of this market. Okay, we need moves up to test to come back down. Okay, so that's basically on the Russell. We're looking at 1263 to 1295 as our retest area to enter a short going down. We could possibly move above it, but short term, I don't see that happening. I mean, once we get there, we'll cross that bridge, as the saying goes. But as of right now, we're looking at 1263 to see how we interact at that level. Okay, and we have a massive double top M formation happening here too. Okay, this is a classic sign of a market getting ready to do exactly what it did, and it's basically collapse. Okay, we made a high up here and we couldn't get above 1741. Okay, the second high we saw was 1716. Okay, you don't want to see lower highs. You want to see higher highs in a bull market. Okay, we don't want to see lower lows like this. We want to see higher lows. See, there's a low, there's a higher low, there's a higher low. Boom, we move up. Low, higher low. Boom, we move up. Okay, we don't want to see lower lows like this. We don't want to be below the trend line. We don't want to be below the 200 moving average. These are never great signs for us. Okay, let's move to gold. Gold is looking very healthy. Last week we were talking about how if we can get a move past 1620, we'll most likely see the gold push up to about 1675, 1680 level, and that's basically what happened. So we got above 1620 and we're able to close some daily candles up there right here, and what happened is we exploded right up to 1675. Okay, and what's happening now is 1676 to about 1680 is huge resistance for gold right now. Okay, and that's exactly what's happening right now. We're having trouble getting above that because once we get above that and we can close a daily candle above that level, okay, we're gonna have a massive surge to the upside, and we're gonna push up to 1781 in a very quick time frame. Okay, basically gold is priming itself to explode. What I expect to happen is for a push sideways for us to hold this trend line that we have on the 4 hour. We're basically interacting with it right now. As you guys can see, last couple times we've touched it, we moved up. So if we can push up above this right now and come up to 1676 again and see where we go from there, it's gonna be a nice play. Okay, so I'm looking to see how we can hold this trend line, and based on how this next 4 hour candle closes, will either give me an entry for long or short on gold. Okay, and finally, not finally, sorry, second to final, Bitcoin. Bitcoin is looking very healthy compared to what everyone wants to make of it. Okay, so daily, once we had this 51% sell off from 7,900, give or take, we had a 51% sell off to 38.64. Okay, since then, we've been constantly moving up and setting higher lows. Okay, now 4 hour time frame, we're at our level of resistance basically from the sell off. Okay, as you guys can see, we have one, two, three, four contacts, and the fourth contact is what basically sent us to 3,900. Okay, we're back at that resistance level now. Okay, and we're trying to break above. And as you guys can see, I've drawn out if we are gonna break above, we're gonna break up, come to about 75, retrace to about 73, and then we're gonna see 8,000 sooner than most people believe. If we cannot break up, if we break down, then the most likely scenario is a retest of the 6,400 low, and that $6,400 low is historical because 6,400 is basically where we spent a lot of time for Bitcoin in 2017, 18, and 19 before we came above and moved to 13,000. Okay, so if we can get above that, we can see 8,000. Okay, and 8,000 will probably be rejected because, again, look at where our 200 daily moving average lies. It lies right at 8,000. So it's a lagging time thing because obviously it needs to close so it can update the line. But what most likely happen is that moving average will go like that and we'll meet it at about 8,000. Okay, so we'll probably be rejected at 8,000, and that's when everybody will scream, we're going back down to 3,000. But we got to see what happens once we get there. Okay, and finally, oil. So, oil, we've been talking about how oil is not looking healthy at all. And basically, what we're looking at is this: we're looking at three sharp sell offs, and the third one being now. And we're now sitting at prices per barrel that we haven't seen since 96, 1990, 2003. Okay, so I mean, gold oil is trading at a price that it was trading at 30 years ago, basically. Okay, so that just based on facts can't be a good sign. Okay, and as we keep saying, once we break support, it now becomes resistance. Okay, and the resistance levels we're looking at now are $36 and right about there. Okay, so we've broken through that. Okay, you can see how this sell off was reversed right at that level. Okay, this one we came down and put down a beautiful inverse head and shoulders pattern. Okay, inverse head and shoulders is when we do that, and boom, goes up, right? Okay, that's the inverse head and shoulders pattern. Send us up from exactly this level. Okay, now we're gonna come up and test it. Okay, we broke support. It's now resistance. So we have to come up and test this level before we can move back down. Okay, I don't expect oil to go much lower than 20. Maybe we can have a little dip into the teens, 16, 17 level. But again, I mean, look at this area of support that we have in the 20 to $10 range, basically. I mean, to break below this would just be catastrophic for oil. Something crazy would have to happen for us to do that. So what I would expect is honestly a couple of years in this area just to build this as a level of support before we can move up higher in this. Okay, outside of that, we're not going to skyrocket back up to 50, $60 per barrel of oil. It's just the demand is so low right now that it could have a damaging impact on the industry for years to come. Okay, it's not going to be something that we recover from right away. Just like how the indexes are not going to be something that we recover from right away. We have a bigger problem that is the unemployment problem in America right now. Okay, in 4 weeks' time, we have 9 million people laid off right now. Okay, how are we going to put these people back to work? We're expecting unemployment claims tomorrow. I mean, to come in at 5 million. Okay, in the past two times, the first unemployment claim that came in after the virus outbreak We were at They were expecting 1.5 million, we got 3.2 million. The second one we were expecting 3.5 million, we got 6 million. Okay, we're expecting 5 million this time. If we get double again, we're talking about 10 million. We're talking about 19 million people laid off, filing unemployment in 4 weeks. That's not something you can just recover from overnight, which is why these moves higher on these indexes on the S&P and the Dow, they just they just don't make sense. And that's the reason why they're low volume moves, because it just doesn't make sense for it to move up. The news doesn't match what's going on here. Okay, we can't have negative news like this. People are unemployed, businesses are closing, people aren't making money, but the stock market's moving up. It's an illogical move. Okay, and unfortunately, things like this happen. Markets don't move in one precise direction, or else we would all be rich trading the S&P 500 and Dow Jones, right? So let's go ahead and see what the news comes in tomorrow for the unemployment claims, and let's see how gold, oil, and the indexes react to everything for the rest of this week. We are also expecting OPEC to have meetings today, tomorrow, and Friday. Talk about if they can cut the production of oil. Basically, what they're trying to do is help the production meet the supply, because as of right now, I'm sorry, the supply meet the demand. So they're talking about cutting the production of it. Okay, because the demand for oil just isn't there. As you guys know, everyone's in quarantine. Nobody's driving. The last time I filled up my car with gas was probably 2 weeks ago, which is unheard of, especially in California. You're filling up 2 times a week at minimum, depending on what car you're driving. So demand for oil has fallen off of a cliff, and prices are showing that perfectly. Okay, so let's go ahead and see how the information comes in tomorrow. Let's see what the how the markets react to everything, and we'll be back on Friday to do a market wrap up. Thank you guys for watching. Hope you guys have a great day.